Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Listen, you're going to want to watch this one till the very end. A lot of very important information in here that's going to help you in your investing and trading journey. All right. For those of you that are new to the page, my name is Larry Jones. This is Stock Up. Okay. Go ahead and hit the like, subscribe, and notification bell. First, let's talk about where we are in this market. This market has proven this entire year that it has been a total trend down. A lot of people are saying, hey, should we get ready to short the market in 2023? The truth is, be told, you could have been shorting the market this entire year. And if you know what you're doing, you could have been making a lot of money, right? I'm going to talk about a few things that you should get ready to do right now and to do during the upcoming harder recession, because we're already in a recession, right? We're in a recession. We've been in a recession all year. I've been constantly saying that. The harder recession is coming. We have a third leg down, another major leg down, I believe, in the stock market and in crypto. But this is what we've been waiting for. This is the opportunity that we've been waiting for. Those of you that's been following me for about 14 months now, I've been saying this is coming and how to prepare and to cash up and to don't put all of your money in the market, right? One of the things that I don't do in a bear market, and I was suggesting to my friends and loved ones, I call you guys family, is to don't put all of your money into the market. Don't overtrade. As a matter of fact, that is number one that you want to write down. Don't overtrade. Don't sit down every day. For those of you that sit down every day and feel the need to put your money in the market, that's not the way you make money. That's the way you lose money. There comes a period or a time when you just need to just sit still and wait, or even cash up. I never sit down, whether I'm doing straight trades or options. I never sit down and say, hey, I got to make this amount of money. You don't force the market. If there's nothing to be seen, there's nothing to be gained, then I just don't trade that day. All right. I'm more of a sniper where I see an opportunity and I go after it. Even now, yesterday, I did a small TQQ play, meaning that the market will go up. And, last week I did an SQQQ play. We've talked about that. And yesterday I had a comment. Someone says, hey, why are you just giving us all this information? Because this is what you need, information. And then he said it was worthless. Just tell us what to short. That is stupid. You go ahead and unsubscribe to this page. I'm sorry, good people. That's where I am right now. You go ahead and leave the family. You're not fit for this journey, because if you don't want information, information is what's going to get you wealth, not someone telling you every day. You don't need permission after you get information. So that's number two. Number two is please study, study, study. Study what price to earnings are on companies. Study how to chart better. Study how to not blow up your accounts and over invest or over trade. Study how to make money in a bear market and a bull market, because they're two totally different markets. All right. At the time of making this video, tomorrow we have PPI numbers, Producers Price Index, right? That's Friday. And then the following Tuesday, we have CPI, Consumer Price Index. And so knowing that these key data points could move the market one way or another, going into a recession, heading into a harder recession, because we're already in a recession, and being in a bear market all year, then me personally, I'm not risking anything. Okay. So I want you to see what CEOs of the major companies are doing right now. It is important to listen to this.
Is a little shocking. What percentage of CEOs are expecting a recession in the next 12 to 18 months?
98%. And that's up from roughly 95% earlier this year. And CEOs have been signaling recession since the springtime in our surveys.
What is causing the recession? And I wonder, is this something we're almost talking ourselves into? Because if you think a recession is coming, you're going to cut back on spending, whether you're a business, whether you're a consumer, or is this the Fed's doing?
Well, I think a lot of it is interest rate tightening by the Fed. And again, the Fed is trying to tackle inflation and to keep inflation expectations anchored. Our own measure of inflation expectations is quite high for next year. And certainly consumers are starting to worry about their personal finances. They're hearing bad news about companies, and they're concerned about their own job prospects.
And Steve.
So that was yesterday. Today, Thursday, remember, I said I believe that it was an overreaction. The sell-off was an overreaction because there was a lot of fear. Don't sit down and say, I have to make money today. Just pull back. Don't be anxious, all right? Don't have FOMO. As a matter of fact, the smartest thing you could be doing right now is actually cashing up right now, because that is where you're going to make the greatest amount of money, and not being hot where your money is burning a hole in your pocket. Because all of the trades that I've done this year, and I've done a lot of good trades and made a lot of good money, and I will tell you that it is going to pale in comparisons to the amount of money I'm going to make by simply investing in good companies, companies that have cash, companies that have revenue. And that's what I want everyone to focus on. I'm not in this just for the short run. I want you guys to make money in the long run and create true generational wealth. And it is not you just listening to people for the next hot play. We're in a bear market. We've been in a bear market all this year. Actually, we've been in a bear market for about 12 months. So here, this is www.yahoofinance.com. This is for those of you that are new. So let's put, so you see here, GME comes up. When you see this in GME, and this is telling you that either GME is running up or down today. Let's look at what it's doing. All right, I'm using it as an example. All right, it's a good example. So it's up today, right? Look at this, 10%, almost 11%. Right, so do you have FOMO and chase GME right now? Let's take a look under the hood. So let's go to statistics, okay? And let's just look right here. Look at the PE. The PE is non-existent. So red flag. What is the PE? The PE is price to earnings. It is the share price divided by earnings per share. And so it is what you pay for the company, right? What is forward PE? What are they going to make in the future? Let's look down. All right? This is what you want to see. Profitability, negative, right? Negative. Let's look down. Balance sheet. We got plenty of debt. Let's look down. Look, this is what you want to look at during a bear market. Cash flow statements. Do you see a positive or a negative? It's negative 340.3 million. Negative cash flow as we are heading into a deeper recession. And what are the companies that's going to make it during a deeper recession? The companies that have cash, the companies that could survive. Remember, the Fed is raising interest rates, right? Making it more expensive to even borrow money. And so companies that are strapped, I don't care if it's running up right now, these are the true bull traps. All right. These are the true traps that literally cut you off at the knees, because after we regain some of the losses that we've had because of the overreaction, and the hardest part of the recession comes, these are the ones that will tank and possibly go to zero, possibly go to bankruptcy. So I challenge you to go through your portfolio and start to look at these companies, because trading in a bear market is the polar opposite than trading in a bull market. Had this been 2020 or 2021, then there's a ton of money to be made in GameStop, as you see. But now every company is being pulled on the carpet in the principal's office and saying, show me what you're worth. So are we smarter than 98% of the CEOs of these major companies? If you really want to make money, follow big money. So let's go back to the last recession. Let's go back to 2008, right? As we know, the market has been selling off all year, right? And we could be here, right? But what we're expecting in 2023 is another leg down, right? And so what happens in this last leg down, that last leg down could last for 6 to 9 months, right? That's what I think. And that's when a lot of these companies will go bye-bye, right? A lot of these companies that are small, fighting for cash, some of them will make it if they're able to do stuff like share dilutions or borrow, or they have access to capital. And some of them will make it and boom. But right now, you need to be in companies that have money, that have a revenue. Because what happens to those companies is the PE ratio actually goes down. It drops. And because they were high at one point, now they get oversold and they become actually what's called a value stock now. And you have some investors that just do value investing. They look for companies that have a low PE ratios. Remember, the average is 15. So if you have a company that the PE ratio should be, let's say 15 to 18, and now that PE ratio is 7, then that's a value company. And if it has revenue, that makes it even better. So that's what we want to look at. So then what happens is we start to buy. We're buying during the recession, not running, buying during this recession. And then this is what happens, the next bull run. Even though that every 7 to 10 years now we have something like a recession or something like that. But look at long-term investors. You cannot outperform this day trading, swing trading. The reality is time in the market will outperform trying to time the market. Right now we're in a bear market, and I want to prepare the family so we could get some life-changing money long term. And so I'm suggesting that you don't overtrade. Right now, I would be doing extremely little trading. I would simply be cashing up. We talked about getting side hustles. So don't overtrade. Don't try to force the market. Study right now. Study charting, study everything you can about the stock market, all right? Don't invest in that don't have revenue. And if you see NA during the PE, you need to see why, because that company could be heading towards bankruptcy. All right. I'm just going to give it to you straight. That doesn't mean because it doesn't have a PE ratio that it is. See if they have access to cash. And that takes a little more time than what I shared with you. But learn how to study these tools. And lastly, tell your friends, your family, your loved ones to get ready, and tell them to start buying when that third leg happens. Just like I showed you in this chart, what dumb money do, and this is not Larry saying that your money is dumb. This is what institutional money says. This is what institutions say our money is dumb money. What we do is when everything is beat down, we stay away from it, including good blue chip companies like the Googles and the Apples. We stay away from it when it's beat down. And then what do we do when it's running up and we hear it from our uncles, cousins, sisters, barber, or beautician? Then we buy it high. We're not going to fall for the okie doke this time, good people. What we're going to do is cash up now, even if we got to get a side hustle. And then when it comes, we've been waiting on this. When the sale comes, we're going to go in, see if they have cash flow, see if they have earnings, see if they have forward earnings, look at what the price to earnings ratio, the PE ratio is. And there's going to be a lot of great companies out there for us to make money. Then what are we going to do? We're not going to dump all our money in it. We're still going to, even if we want to invest chunks of money, we're going to cut those chunks up into 4, 3, or 5 pieces. And we're just going to just put them in as it goes down. And then what we're going to do is chill. We're going to just wait and watch our money grow. Apple's not going anywhere. Google's not going anywhere. So you guys with the information can go and search for companies yourselves. So that's what I want to talk to you about today. Because when stuff starts going green, we suffer from short-term memory. Let's truly cash up and get ready with the knowledge on how we're going to make money. Now, if you don't have a broker, you guys already know this is what we're doing here. Download the top link and you're going to get, just for depositing $100, you're guaranteed 10 free stock. This is their most aggressive promotion to date. And you can get up to 20 free stock by depositing $1,000. Okay. And we're simply cashing up and we're going to be looking for those deals. Let me know if this helped you. This is we call it a kumbaya moment, a come to Jesus moment, but we have to be serious about making long-term money. I am serious, not just for me, but for you in this journey. So you don't need a hot call right now. What you need is information. Please share this with your friends and family, and we're going to do well in 2023. Live, love, laugh, and learn.